Man, it is a pleasure to be here with you, Brody. Wendy Simplice from Simplice Finance, SirHansfelix. You already know the vibes, you know the voice.
Yes,
And
sir.
today we are just two kings, ZBs from the block, 561 Florida, chopping it up together. We've been
Go
through a
way back.
lot way back,
Go way
bro.
back.
Yeah, back when they thought we was cousins, they still do.
No, for real, for real.
So we just had to do it
Pleasure,
one time,
man.
became family.
For sure, for sure. Pleasure, man. Thank you for having me on, for sure.
Yeah, bro. So, we come from two different worlds. You went to school for finance. I went to school for health science. And then all of a sudden, something happened and I just embraced the world of trading and here we are. And so lately, we've been seeing you online, just doing your thing, just educating the people. And so what just like made you start doing that, bro? Because you be dropping a lot of gems.
I just wanted to like kind of like share my knowledge because I was used to like post a lot of stories, a lot about like what's going on with the markets, with investing and things like that. And then I saw other people like dropping content. I was like, you know what, maybe I should, join that area. But I wasn't really good to start off. I was like, man, I sound weird on camera, man. I sound all nasally and stuff like that. And
That's
then like
insane.
I recorded my first video and I was like, it was on my phone for like a week. I was like, I don't want to drop this or something like that, right? Because I started on TikTok first. And then I just started posting quietly, not letting anyone know, like my followers or people who know, because I didn't want them to like really cringe, because I cringed when I was making it myself. So then I
Now you
just
want me to
I
go
just
back and watch and see like what was so
no,
cringe
no,
about
no.
it? Which one was it?
Yeah.
What'd you talk about?
So in the beginning, I was just talking about like pretty much certain like how to invest in certain stocks and stuff like that, or ETFs, things like that. And then I started talking about different type of tips, to help people save money, like personal finance stuff, budgeting stuff. But that's where it kind of started. And then I try to dip into like things about the economy and things like that, because
Hmm.
at the end of the day, the whole economy affects everything that we do in our daily lives. And a lot of people
That's a
don't know
fact.
about that. So I just try to like simplify it and break it down for my audience, really. So
So this got nothing to do with your last name, right? Simplice, you just be it's about simplicity, something like that.
Yeah, simply. I just like before I came up with the name, bro. I had like a sheet of paper and I was just writing names. And I was like, which one sounds the best or whatever. And I was like, Simply's Finance kind of like it kind of rhymes. You know what I mean? It
Hard.
rolls off the tongue better, right? So I just kind of went with that. A lot of people when I tell them, oh, like that's actually my last name, the Simply's part. That's like, yo, that's pretty cool. Like how you put the two together. So that's how it came about, man.
Yo,
For
that's
sure.
dope, bro. I feel like I'm listening to a story on how like rappers sat down and made and just like picked their name, but of course, like you just rapping to the people about finance and like business and whatnot, bro. That's hard, bro. That's one heck
Appreciate
of a
that.
story.
Appreciate that.
One thing we
Appreciate
don't
that.
realize is like your story becomes cool after you've actually made something happen out of it because
Yeah.
nobody would have cared, or you probably at the moment you didn't even think that really would be the story, so it makes you very conscious. And right now you probably thinking like, wow, like here I am telling my story off of like an action that I took, so
Yeah.
gotta give you your flowers, bro. Gotta give you your flowers.
No, for sure. Appreciate that, bro. Appreciate that. This is just the beginning though, bro. We got long, long journey ahead. For me, I kind of see this as like a 10-year plus plan. It's not something that I'm trying to have like short-term gratification or anything like that. This is like a 10, 15, 20-year thing for me. I just want to keep going uh with the content stuff, sharing the message, sharing the knowledge that I have in my head with others and try to simplify it for them for sure.
Simplify. Yo, that's that key word. I'm definitely gonna I'm gonna keynote you from now on. Like, this is giving you a lot more star power with your last name, bro. This is efficient. This is efficient. I mean, starting out to have your own brand, just like myself, man. Like when I came up with Sir Hans Felix's, I just was trying to get rid of that Instagram handle I had before. Like Papi Suave is cool and everything, but it's not good for business.
No, for sure, for sure. And it's pretty cool too, bro. It's pretty cool. It probably relates to the Gen Zers and stuff like that, right?
Yeah, absolutely, bro. So let's get into the meat of things, fam. No Diddy. So so I come from the world I come from a world of Forex. And
Hmm.
I put a lot of years into this. You know that you actually was part of my Telegram when we first started. And this was like on May 18th, 2018. And so now, like, what, 6 years later, uh things have changed. I've
Yeah.
climbed into my industry. I've learned a lot. I've taught a lot of people, and it's come to a point where like we had crossed paths again because now like you're deeper into the stock game than I am. You're in the options game than I more than I am, and I'm learning to like learn about this industry and the various arrays of it, because it's time to diversify even more. Now that I've like pretty much gotten comfortable in my niche, and
Hmm.
so I always been thinking like, what are some of the similarities with forex and the differences in options and even long term stock investing. And I thought no better person than you to, for us to have this discussion because, like, from my world, bro, I'm here catching pips. You see the charts already here, like it's Sunday evening, like we ready to go. But I don't think most people who are doing long term stock investing or even like options trading, I, I'm sure like somebody out there is like breaking down their charts ready to like catch these moves, but I wouldn't even know like how to scalp trade on options or intraday trade on options, uh, or even know like if technicals is enough, which I know it wouldn't be when it comes to like long-term trading. So like what's the game plan and what would be a difference?
So with forex and options, you can play them in like similar ways, right? You'd like mark up your charts, but for with option trading with stocks, what you would use if you like day trading the stock, you
Yeah,
can either buy a call or a put options. You can it can only goes two ways. Well, it can consolidate. If people say that's another way,
facts.
but what you would do in this sense is like if the stock goes above the VWAP and there's a certain volume that you like, you could buy a call option, and then if it goes up that day where you're predicting it to be, then you could sell when it reaches your target. Or the other way, if the candles close below the VWAP, which is the 13 EMA, then you would go ahead and sell, right? And then you buy put options, pretty much a sell, and when it goes lower, you would sell. So it's kind of like with how you would do with forex. You put a buy and a sell, then you choose your different lot sizes. So it's kind of like you could do the same thing with stocks with stock options.
All right, cool. I mean, you saying all that, but all I keep thinking about is like, man, I hope he ain't talking about some wet ass profits. You know what I'm saying? Like, we don't know what VWAP is. I've never heard. Nah, well, I've heard it before, but like, for those people who are watching right now, like, would you explain what a VWAP is, bro? I'm sure they would dying to know.
Yeah, it's like how EMAs work. Certain EMAs, you have the 50 EMAs, right? And then you
Talking
have
about the
the
exponential moving averages.
Yeah, and then
Yeah.
you have the 50, well, the 200 EMA. That's if looking more like on the higher time frame. Well, the
Yeah.
13 EMA is just the lower time frame with that. So I don't know how to put it in words. You may know better terms than that. What do you guys call it? Like,
Yeah, well, when we talking about moving averages, we talking about indicators that pretty much help you to simplify where the market
mhm.
is going based off of like the laws of averages, whether 200 or 8 days or 50 days, just like the EMA say. Um, so like I'm imagining a VWAP basically is just a confluence of lines and things that can help you
Yeah.
like see structure and direction.
Yeah, so you'll see the line, and like if the candle closed below the EMA, then you'd go short, and if it closed above, you'd go long. Pretty much like how you would do in forex. Like say if you have like a 50 EMA crosses the 200 EMA or something like on the up, and it's like the golden cross or something. And if it's the other way, then it's like the death cross, kind of like that. So whichever way the candle closes and the volume that you see, you would take the trade, but you also have to keep in mind the time of day that you're doing that. Because if it's like closer to the market closing, there may be a higher volume, or if it's after lunch, you have lower volume
Right.
opening. when the market first open, like that first 30 minutes usually kind of wild. So you got to pay attention to the time of day when you're using options to trying to trade.
Okay, so wow, this is interesting stuff because I am seeing some correlations because yes, like me, for instance, I trade the New York session. So at 9:30, there's a lot of volume that's being pumped into the market. And then, typically within the first hour, sometimes the first 15 minutes is all you need to succeed. But at the end of the day, though, like yes, towards the afternoon, 12 to 2 p.m. or 4 p.m. I mean, the volume can usually die down or pick up by 2 p.m. to continue until the end of the day.
Hmm.
That's interesting that you say that, which is usually how I use my strategies. By the way, I don't really use much indicators anymore from the last time you met me.
Oh,
I pretty
really?
much trade, yeah, the charts with very simple like structure and supply and demand.
No
And
EMAs?
Nah, bro, I can pretty much see what
Really?
I need to see without them these days. But if I need to add anything like a Fibonacci extension tool, something like that that can help me measure the distances from how they pull back like a slingshot and getting ready to take off. And that kind of helps me to see like where price might end up at off the probabilities. It's a probabilities game at the end of the day. But
So
when you
you, so
spoke,
you, to
go ahead.
interrupt you, but you mainly just use like price action?
Yeah, I mainly just use price action, man. Cause like not just price action too, though. It's about time and price. I can tell where the liquidity sits from the previous session and where prices scoops up under there. And I'm like, okay, I see what's going on. Because once they scoop under to get a better pricing for themselves, these institutions, I know they got to break, retest, and continue. So then I catch them boys pulling back, and then I ride the wave with the institutions. So
So you,
that's
so you, so you kind of like, sorry for interrupting.
now
So
you good.
you pretty much seen like where like the order books are at, like
Yeah.
maybe like the psychological lines, maybe
Yes,
the
sir.
even numbers or something, because like they have to go clear the books, like the market makers and stuff like that.
Yes,
Pretty much what
sir.
I'm referring to.
Yeah, for
Okay.
sure, bro. For sure. I mean, when you think about it, the order books or order blocks, what they do is they create order in the markets and they block
Mhm.
any retail traders from possibly moving the market, which they can't because only institutions got enough money to really move this market.
Facts.
It takes like
Facts.
1.2 billion, 20 billion, millions of dollars to move this market, bro. Like, isn't that insane, son?
Yeah, no, it is. It is. It is. So you
Yeah.
gotta go the way they're going though.
Absolutely, you have to, or else you're grits. It's just what it is. And a lot of false directions can be created of people not knowing, like as retail traders, when you first start out, you don't know that you are the smallest, the most insignificant part of the market, but at the same time, you and hundreds of millions of people, we are at the mercy of the algorithm. And so unless we have a functional strategy, then we're not really going to make it into this we're not going to make it long term in this game at all.
Yeah, as far as being successful.
Yeah, as far as being successful. So this is why, like, the last time we had a conversation off camera, we was talking about like the different options of of choosing your portfolio or choosing the asset classes to trade with. Like for instance, myself, I do trade US 30. Sometimes I dabble into NASDAQ 100, but you mentioned SPX 500 as like a long-term investment because of the way it's very smooth. It aligns with the markets, and it is indexed and priced at 15% overall return, and you really can't beat that besides a lot of
Yeah.
different stocks.
Yeah,
Elaborate
let
on that.
me yeah, just to touch based on that. So the S&P 500 is an index fund, right?
Yes.
It and how it works is like there's like 500 companies in the S&P 500, right? These are the top 5 best companies in the United States. It's not
Top
global.
500,
Um,
man.
yeah, top 500.
Yeah.
I would say like the US has the best stock market in the world. Everyone wants to invest here. We're number one. If there's a market crash here, it affects the rest of the world. Just for just to put that out there.
Context.
So
Yeah.
Yeah, so when we had the 2008 financial crisis here, the whole world went in a recession. That's because of what happened here in the United States. So
Mm,
it's a big market, right? So with let me just get back on topic. So with the 500 companies, the S&P 500 returns now updated. It's about 12% a year, I think, for the last 50 years, and about 10% for the last 100 years, right?
which is
You may think,
insane.
okay, yeah, which is pretty good return. So if you have like 100,000 sitting, not that people have that, I'm just gonna use it as an example, then you could make 10,000 a year in your money, and it's pretty safe. It's not super volatile. You can sleep at night instead of having 100,000 in a single stock, and you could wake up tomorrow and you're down 20,000, 30,000, and you start panicking. But with investing in the S&P 500, what happened is something called compounding, right?
Yes.
So if it gives you 10% this year, next year it gives you another 10%. The 10% is not on that 100,000, it's on that 110,000. So now you have compounding interest
Mm,
building up in your portfolio. And it does have a 2% dividend or 1.8%, somewhere around there. I haven't checked lately, but so this year the S&P 500 is up 15%. Last year it closed at 24%. So there was a 24% increase last year, and this year we're up 15%. So that 15% is compounding on the 24% interest that you had last year.
sheesh,
So
that's
yeah, so
crazy. That's
exactly.
insane. That's some good
So
profit gains for anybody who don't really have to be like expert on the charts, looking at the analysis and the VWAP and the
yeah, yeah,
Fibonacci. All they gotta do is use that investing style. And by the way, this is for entertainment. We are not financial advisors, and
yeah,
this is strictly for educational purposes. All right, so please do not consider this as financial advice. All right, so we just got to say that as a disclaimer. So,
yeah,
continuing though, like we got to go back into some of those terms that we mentioned. Like for instance, the S&P 500 is the top 500, the best companies in the United States that do average some really good gains, and it stands as like a basket. And so instead of like putting your money in like multiple baskets of risky stocks, this one stock usually averages 10 to 15% returns for clients and investors, which is a safer route. And I'm assuming that like you yourself are more of like a moderate to conservative investor.
yeah. Just to touch base back on the S&P 500, I would say if you like a beginner, right?
Mhm.
If you wanted to invest, do your research, talk to your financial advisor. I'm not telling you to buy or anything, but um, it is the best thing to start investing in as a beginner, simply
Right.
because if you new to investing and you have $10,000, you buy, hey, my friend is talking about GameStop. Let me buy GameStop, and then 2 days GameStop is down 50%. Now you went from 10,000 to 5,000. What's
Whew.
gonna happen is you're gonna sell and you're gonna hate investing. No, I'm not touching stocks, right? So for you not to hate investing when you're starting on, I would say start with the S&P 500. Put your money
Mm.
in there, then watch it grow. Then you're like, oh, this is kind of cool. I'm up 10% this year. Let me put more money in this. And then maybe you can put like what, maybe one, like 5 or 10% in stocks here and there, just to get your feet wet, to start understanding stocks so you don't hate investing. That's why tell people to start with. But to get back to your question, you were saying, I'm sorry, I just lost my train of
No,
thought.
you good, you good. The train keeps going, bro. So, I guess you would be the type of investor that chooses the moderate, the conservative route
Okay.
instead of like the riskier one. Like for
Yeah.
instance, we spoke the other day on like trading the markets actively like I do. It's like you have to always be in front of it, or not all the time. However, like when you choose that route, for instance, the S&P 500, um you get to sleep better at night. And
Yeah. Yeah.
is that
So,
is that sleep
so
better at night versus just like being like antsy, just making sure your money's still out here safe in the
yeah.
account.
Yeah, I mean, when I was like younger, I used to like the risky stuff, trying to hit home runs, trying to get rich quick type You know what I'm saying? But that never really works out because when you up a lot, you like it can go up more and then it drops and you're like, no, go back up and you keep holding and it goes down to zero. So I've been there. I tried the get rich quick
It
stuff.
didn't
I guess
work.
it didn't work. It never does for whatever
We didn't
reason.
get
I didn't
rich
get
quick.
lucky.
We're getting rich slow.
Exactly, exactly. So now I'm more conservative. I don't chase the high super beta plays like this stock here, this stock there. I might buy into them, but maybe like a small portion. I won't put like a large portion of my portfolio in it. Right now, I own blue chip stocks and
Okay.
ETFs. So some of the blue chip stocks that I own is Amazon, Nvidia, Apple. I have some Tesla, really hasn't moved lately. Another company that I own is Microsoft, and what's another one that I have in my portfolio? I'd have to check, but I have some stable blue chip companies and some ETFs because these companies they're so large. And when they report earnings, everyone is expecting them to grow. Analysis, we watching them like a hawk. They're like $1 trillion market caps, right? So when they release their earnings, you have to go dig. You got to listen to the earnings report. You got to dig into the financials. Hey, is revenue increasing year over year, month, quarter over quarter, things like that? Because if it's not, then okay, what's going on? You need some type of explanation to the reason why your sales did not meet expectation and what you're gonna do next quarter or the rest of the year to get that up. So that's why I stick with those companies. They're proven. They have big moat, which is the market that they control, right? So they have a big market share and stuff like that. So that's why I stick with those for now, more risk adverse. And I know for a fact, beginning from the beginning of the year to the end of the year, those companies, if there's like no major recession going on with the economy, that they're going to end up being in a positive. So that's why I go that route.
Very well said. Very well said. And this is where you were tying in the market crash from 2008, because like if something were to happen like that, even if you were investing in the S&P 500, you are still guaranteed to see a good return that year, or versus the previous years, you wouldn't be like starting from scratch, correct?
Yeah. So if there is, for example, a recession, right, or a market crash, what I try to tell people, hey, don't be if you're in the S&P 500, like you holding this ETF, don't be afraid if there's a crash because what happened is 100% of crashes has recovered over the
Mm.
years. If you're looking at the 2008 crash, the 2000 bubble that popped,
Yeah.
1989
1989,
Black Friday crash,
1929.
1930, 1929 to 1933, all these crash, like they all recovered, right? So
Yeah.
if you think about it, if there's a crash going on, cash is king. And if you have cash, I would just keep buying at a low level. Then when the market recovers, you're gonna wish that you bought more because you was buying when everything was on sale, right? So that's how I kind of look at it when there's major corrections or crashes in the market.
That's a fact. And you've mentioned a lot of key things here about the intelligent investor route. Because when you think about it, earlier you've mentioned that, when I was younger, I want to get rich quick. So now you are practicing a delayed gratification method instead of instant gratification, and we all go through
Yeah.
that, right? You seeing yourself at age 23, 25. You're like, okay, life is starting here after college. I need to pay back Uncle Sam and Sally
Hmm.
Mae, which, by the way, we never met these aunties, but they always tell my nephew, what you got for me, right? And
Yeah.
so then the second thing is, like you mentioned, market crashes. But my question is it ever a market crash, or should we call it a market correction or a deep market correction? Because I don't think, in my opinion, there's ever such a thing as a market crash if it corrects the very next set of months or weeks, or even the next Monday, if they inject some, liquidity into this market like they did in March 2020. What do you
Yeah.
think about that?
Yeah. So there's the smaller ones are corrections, but the 2021, that was a crash,
Woo!
but it was a V-shaped recovery
A
because the
V-shaped
Federal
recovery.
Reserve, yeah, the Federal Reserve rushed to stimulate the market. And what they did, they lowered interest rates to basically zero
Zero.
to stimulate the market again. So we had a V-shaped recovery. So 2008, that was a crash because we went into a deep recession for several years. Um, the 2001, I believe that was also a crash. But what we experienced in 2022, I believe the market was down like 22%. So that was like a deep correction. But anything below 20% is considered a if the market goes down 20%, it's considered that it's in a bearish market. You're in a it's bearish or whatever. And then if it goes above like 20, then you in a bull market. Oh, I might move there. So anything from that happened apart from 2020, 2020 was a crash, and then everything after that was deep corrections.
Wow. Well, thanks for that clarification, bro. And so you mentioned about the blue chip stocks and the benefits of it. Um, we would consider Walmart a blue chip stock as well, right?
Yeah, yeah. Walmart was in the like super blue chip stocks back
Yeah.
then because they had like a higher market cap. But over
Yeah.
time, you have these gigantic companies like Microsoft where their earnings is exploding, Amazon, Apple. They kind of surpassed Walmart as far as market cap. So I guess you can have a different you can categorize Walmart somewhere else as far as blue chip. But right now, I guess the top eight companies is NVIDIA, Google, Microsoft, Amazon. I think Micron is in there. There's a chip company that's like it's number eight. So those are
I
like
can look that
this.
up right now.
Yeah, yeah. And I think it's either Broadcom or Micron. One of them or like is number eight. But they're in the chip space as well.
Okay. The top 10 blue chip stocks. I'm looking that up right now. Yep. You got the Coca-Cola, the KO, the American Express, Nike, Apple, Microsoft, Walt Disney, Merck, 3M, MasterCard, Pfizer.
Yeah,
Damn.
yeah, those are blue chip because they're proven. I guess you can say Walmart is a blue chip
We
stock.
might
But
as well
I
call
was
them the NASDAQ 100 because most of the NASDAQ 100 companies are already up there.
yeah.
That's crazy. So it all lines up just like you
Yeah,
recently.
so there's a lot of how you say overlap when you're
Right.
looking at the Nasdaq, the S&P, and the Dow Jones. Some of these companies. Sorry, excuse me. Like for example, Apple. Apple's in the Nasdaq 100. They're in the S&P 500, and they're in the Dow Jones. So
Right.
there's a lot of overlaps.
They're big dog for sure, for sure, for sure. Okay. So now I will say though, like when it comes down to investment strategies as a trader or investor, it's all about the higher quality strategies. So that way you don't overwhelm yourself and have your pennies stuck in a bunch because like me as a Forex trader, um one thing I'm always having to tell my students and people who ask me about like this world is like you have to be able to know yourself, know what you identify with as far as like what works for you, what doesn't work for you, or doesn't really align with your personality. Like
Yeah.
some people are risky just by
Hmm.
nature, right? And other people are more like conservative and safe. Now, this is why it's important to learn various skill sets within this space so you can figure out more and more like what suits you because like you can actively be trading the markets like I do and at the same time put some money to work and put it in different baskets that will be here for the long term or for the
Yeah.
short term because like it there's no limit to how many accounts you can open, right? That's
Yeah.
why I wanted to ask you like, if you dabble in options, how many option calls can you place? Like, is it based on your account size?
Yeah, it's based on your account size, but you could place a lot. You got these big institutions, man. When they buy options, it's like 2,000 call options expiring
Golly.
6 months or something like that. Yeah, you can buy as many as you want as long as you have the funds available for that. Another thing I heard you were saying, as far as like different type of investing style, I guess it depends what season that person is in. And when I say season, it's like a young 22, 23-year-old fresh out of college just got
Hmm.
their first real job. They're gonna be super risky, right? They're gonna take
Yeah,
all the
that's a
type of risks.
fact. You
But
trying to get out
a
that
third
job.
exactly, but a 30-year-old with family and kids at home will be more risk adverse. They won't be, you know what I'm saying, like putting all their money in one play and hope for the best. But the 22-year-old can, and I guess is what type of season you are in your life. and what type of investor that you will be or you should be.
Right. I guess in essence, uh, time and experience is the best teacher,
Yeah,
because that's what helped you to become smarter and wiser about like what you prefer instead, because one gave you a lot of heartache, and then the other, now you could drive home at night feeling like, okay, the lights are still going to be on and you still can
yeah,
continue this investment vehicle
for
until
sure.
the wheels fall off. And
Mhm.
from what we understand is the market is not going nowhere.
It's not. It's gonna be here 100 years from now.
Yeah, no
Believe it or
matter how
not.
many crashes we hear, or like if you in this vehicle, like you better make sure you put your seatbelts and fasten it up. You know, really just
There'll be
stick
ups.
around for the
There'll
long.
be
Yeah,
up.
no matter the bumps, no matter the potholes, like the road can be long, but it can be a very rewarding one. Um,
For sure.
yeah, like in order for us to really survive these market crashes, it's very important to dollar cost average, because we know like this thing, no matter how
Yeah,
deep it corrects, it'll still be here to recover. And you got the feds backing them up.
yeah, for
And
sure.
the
You got the
most
Federal Reserve there to save the market.
Absolutely. And one thing I've noticed, bro, is America really runs on credit just as much as it runs on Dunkin'. You remember
No,
that old
no, for
commercial?
sure. Yeah, no, for sure. Like the as far as right now, you see how the Federal Reserve, like they had to raise interest rates a
Yeah.
lot, by a lot,
Yeah.
to pretty much slow down they had to slow down the economy because inflation was getting out of control. And one of the main reasons why inflation was getting out of control, because businesses and people were able to borrow money at such low rates, right? And businesses and people were spending. So the velocity of money was just, you know what I'm saying, exchanging hand, it was happening at a rapid pace. So that ended up causing inflation. Prices of goods and services are going up because there's too many dollars chasing fewer goods. So it
Right.
causes prices to go up. So they had to raise interest rate, and when they raise interest rate, they literally put a lid on the economy, right? They went from 0 to 0.25 to 5.25% or 5.5%. Now that car loan you got to go get is more expensive. Now you don't qualify for that car that you wanted. You got to get a Yoda now instead of the Beamer, right?
Oh
Now,
man.
now,
Shout
now,
out to the Yodas though.
no, shout out to I like the Yodas, but I'm just saying that they did that on purpose to slow down people from spending too much money and businesses from spending too much money, because businesses have something called a revolver loan, right, with their banks,
Mm.
and it's a variable rate. So they were paying like maybe like 4% to borrow money from the bank, right, and pay it back. Now it's at 15, 13%. That business has to spend less money now, right, because their operating expenses is higher, right?
Mm.
If I went from paying 4% on borrowed money and now I'm paying 14, 15, 14, 16%, now I have to slow down my expenses. I have to cut costs. Hey, SirHansfelix, hey man, we gotta cut you, bro. We don't have money to pay you anymore. Like, they're cutting costs.
Mm.
So you have less job openings, right? The job market, that's why we keep looking at the job market. We used to have like 800,000 or something like that. I don't know what it is, but there's less job openings. People are not switching jobs as much because there's less money going around, and then it was by design to do that. And I think the economy slowed down enough. And soon they might start lowering interest rate to stimulate the economy again. Because if you keep rates high too long, they might send us into a recession. So that's what a lot of investors are paying attention to the Fed. They screaming like, "Hey, you need to lower interest rate," because we see it. You go out now, people are not flexing as much as they used to during the
Yeah,
pandemic. Remember?
man. That 2021 flex era was something crazy.
It
You
was
just had to be
crazy,
there.
bro. Everybody was rich,
Right.
bro. I was
The
on my
PPP
like,
loans was busting, you know what I'm saying? These,
right,
hey,
looking like,
Biden was
yo, did I
throwing
miss
these taxes out here, these what they call them, these checks, these stimulus checks was going
stimulus
around.
checks?
Hey man, the bando was going crazy off them checks. And what's
Yeah,
funny is like when we think about all of these weekly checks and unemployment checks and stimulus checks that was coming up, bro, every week there could have been a solid plan to invest in the market only if one had known that this really was going to recover in the next 18 months. But the way the media spun it too, it has a lot to do with how we felt about it, because I go back in time. often on the charts, and I go back and understand, wow, like so many things could have been done had I been better educated. And this is why like it's put a fire under me to be able to like have content like this and get a
Yeah,
perspective from another colleague and friend who so happened to had uh, gotten so much experience from what happened.
yeah.
And one
Uh,
thing I remember was like, man, if I could have just put a little bit of those like stimulus check money into like a stock that I knew would recover, like the S&P 500, man, we would have ran some numbers.
Nah, for real. I, for sure. I lost a lot of money too because I had a lot of stocks that was like high flyers during the
Yeah, yeah, yeah.
pandemic. But I did look into some of these companies, and there was a lot of lies going on from because these companies they be lying, bro. They be projecting like super hyper growth. They'll send investors these stuff how much their companies are gonna grow, but that ended up not happening. But long story short, I lost a lot of money, but I was up a lot too. So I was like, whoa, like, and the worst thing that could happen to someone, and there's a lot of people with businesses that boomed during the pandemic and they're not doing so well at this time too. The
That's
worst thing
true.
that could happen to you is to be successful by accident. And I think that happened to a lot of people during the pandemic. We were successful by accident. You bought a stock and went up. Now you think you're a guru with stocks because you bought five
Ah,
stocks and they all went up. So because
uh,
all stocks were going up at that time. That's why you look like you was a you the band. Every stock I bought was going up. Everyone was an expert with stocks, bro.
mm,
So you ever heard that everyone's a is an expert in a bull
in
market?
the bull
So
market. Yeah, yeah.
yeah, yo, buy this, buy that, things like that. So I feel like a lot of us were successful for a short period of time by accident, and that's the worst thing that could happen to a business owner and an investor. Because if you don't know how you made what you made or how you got to where you at, when the tides turn, it's gonna be really bad. It's gonna go the other way. You're gonna be depressed, and you won't know how to fix it.
Wow, that is powerful because thinking about it, it's true. I tell many times you realize through the years that it is very much important to know why you won or why you lost,
Yeah,
because how else can you implement on a strategy to do it again and again and again?
yeah.
And that's the secret behind consistency, is knowing when you lost, because when you do lose, you document it, you gain from that experience. And so what ends
Mhm.
up happening is, you lose, but you can take a loss and get back to winning quickly when you have a winning system
Strategy.
and strategy. Yeah, so just get back to winning, learn quick,
Mhm.
right? Lose fast, but get
Yeah.
back to winning.
For sure, for sure. They say losing money is the fastest teacher, right? Once you start losing money, it hurts. You're like, okay, I need to stop playing around. So
Absolutely.
but like you said, like definitely have a system in place. If you have a 70% win to 30, if 70% win ratio, so you win 7 out of 10 times, you keep it going, you're better long term, right? Even if you have a 60% win ratio, bro, you still killing. With
Right.
if you have a system where you cut your losses quick and let your runners run that way.
Right. Understood. Now, the difference in trading Forex too is that like those profits that you were mentioning earlier, um, cashing them out brings in some capital gains. And most people don't talk about that. And the second thing is, um, I think when folks become accidental successes, they don't have an exit strategy. And that was one of the biggest downfalls, because again, the media keeps pumping that so and so Bitcoin will be seeing 100,000 in the next 6 months. You're like, oh well, why should I close my positions? And what most of us did not learn, and we learned it the hard way, is to scale out of your positions, leave some runners, but also pay yourself. You know,
Mm,
I've met a lot of people who say, yo, I did not want to close my positions because I was afraid of the capital gains taxes. I wanted to hold for a year. And then a year
um,
didn't even pass by, and it was like 6, 7 months, or even like a few weeks. We talk about GameStop here. And all these percentages of gains, you would have better off getting some capital gains taxes because you capital no gains tax at this point.
Yeah,
How you feel
yeah.
about that?
So, um, if you have to pay the capital gain taxes to sell a position, I would say sell the position and pay the taxes simply because if you just showing me a screenshot a year later how much you was up on GameStop but you never sold,
Oh,
I'm sorry for you because
sick
eventually it went back down, right? A lot of people are sitting on let me not bring it in like Dogecoin and stuff
regrets.
like that. They just have screenshot. Like screenshot ain't nothing. You should have sold, pay the capital gain taxes and keep it moving. Um Based on your tax bracket, that determines your capital gain tax. And it may not be a lot for some people, but I know I think if you're married, you make less than 100,000, you pay zero capital gain taxes. I might
Oh
be
yeah,
mistaken,
I
but
ain't know.
yeah,
Okay, well,
yeah,
shout out to marriage,
well,
brother.
yeah, if yeah, if you make less than a certain amount. But if you're like a consistent trader and you always making money, like, and you have to pay capital gain taxes, I would say to either trade under a business, right? Put it under a
Mm,
business and call it business revenue or something like that when you make the income, or incorporate as an S corp. What that allows you to do is you can pay yourself, right, as a distribution. And when you pay yourself, as you have to give yourself a reasonable salary too. It has to be about 30% of what the business is making, I believe. But then you could pay yourself as a distribution, which is kind of like dividend. And
right.
dividend is taxed less than ordinary income. Or as far as you could pay capital gain taxes as high as like 37% based on your income, right? But if you do distribution from a company, or you could leave it in your company instead, you'd pay less taxes. So that's something, if someone is interested, they would have to look into. You know what I mean? That's the
Wow.
better route.
Man, that was some gems, man. Where'd you learn all these gems?
I'm also deep into taxes too, man, because going forward, if you thinking about building wealth, you need to understand the tax code. I'm also a tax preparer and have a tax business as well. When it comes to taxes, if you're making the money, you need to learn the tax loopholes and strategy to keep most of your money. You don't want to keep giving that to Uncle Sam, man.
Oh wow, that's crazy, man. I just thought you learned all this at Simplice Finance, you know what I'm
Oh
saying?
yeah, you can if you follow my page. I do drop a lot of these gems too, so just
Okay,
y'all should
cool,
go
cool,
follow.
cool, cool, man. That's what's up. That's what's up. Yeah, and yeah, we appreciate you for dropping a lot of these games, these gems, because they do help, especially guys like us within our community, man. We need to be educated more than ever. First, we are part of many communities. One, the generation that we're in. Two, we're Haitian kings. Three, we are black. And so I think there's a Bible verse that said, my people suffer. What's the reason? Lack of knowledge, you know? And so this is why, like, I'm conscious about making content like this because it's conversational, but it's also educational. And, what would you say, like, if you were to be looking at yourself from 4 years ago? Like, what have you learned at this point in investing in some of those companies that has brought you like the best lesson and the worst?
Um, Um, I would say losing money was was like a wake up call for me,
Mm,
right? And it changed me, right? It
mm.
changed me to the point where I didn't really trust CEOs when they would have interviews. I would look at the back end of the company, right?
The
You had to
balance
like
sheets,
the balance sheet, you got to see when they report earnings,
price to
because
earnings. Yeah,
companies have to report every quarter. So you need to pay attention every quarter when they report. You look at their financials, you look at their balance sheet, you look to see what they're doing, their growth, or they growing, right? Once you start
right.
growing, I don't want to own you because you're gonna start declining or whatever, right? So
Hmm.
losing a lot of money got because I was so naive. Just, oh, the CEO said this is gonna happen. I believe in him. No, still do your research, man.
Oh
That was
man.
the biggest thing because a lot of them go on these CNBC and they just lie because that's what they do, bro. So you just have to like do your research. Don't trust anyone when it comes to as far as like when you have a lot of money invested in a stock or a company, do a lot of research. So that's what kind of like got me to where I'm at now. And that's why I'm really heavily into ETFs, because those are a basket, right? I can sleep good at night knowing that I own the S&P, or that I own the Nasdaq or the Dow Jones, whatever it is. There's other ETFs too. You can do your research that are actually good. They're like diversified, but
Yeah,
that's the reason
exchange
why.
traded funds, ETFs.
Exactly.
Hmm.
Exactly. So if one company goes bankrupt, I don't have to worry about it. There's another 499. So that's what like got me to be where I'm at now. And and I'm sharing the knowledge with people. Hopefully they can avoid the pain that I felt just losing a lot of money. So that's what I would say about that. But give me 1 second. I do have to grab a charger because my phone is dying.
Yeah, go ahead and do that. We'll take a
Let
five
me
minute
do
break.
it. Yeah, and the audio might change a little bit too because I have to unplug the mic. Hold on.
All right, cool.
Yeah, so after like losing a lot of money and finally realized, okay, I was tricked, I started doing more research into these companies. I started figuring out, what's a better way to invest without losing my money, or if my portfolio is down, um, will it come back up? And when it does, I'll be up, or should I be buying during this dip, right? Because we're gonna be holding stocks or ETFs, and they're gonna have corrections, right? For whatever the reason, because there's but the market does what it does, right? If the market is going down, then all stocks are going to go down with it. You have to understand, hey, is this a buying opportunity or should I get the heck out, right? So if I hold a stock and it's a good stock, a good company, and I bought it at price, let's say 200, it's at 180. If I liked it at 200, I should love it at 180, right? So
Mm,
that's why you need to do your research to make sure what you're buying is a great company. And if you have a discount, if it's Black Friday, go scoop some more up. So that's what I would say as far as like what experience I had that taught me great lessons and to be who I am right now.
well said. And I will add by saying, like, if you're looking at a stock, you need to be asking yourself, can I see me marrying this stock and the things that come with it for the next 3, 5, 10 years? And if that answer
Mhm.
is yes, then yes. If the market dips, then that's just your opportunity to get in at a cheaper price. And
Yeah.
that's that long-term mindset. But like when you first started out learning about this whole world of trading and investing with like Forex, for instance, that might have not set in until way later. Or if you've never learned any long-term thinking strategies, for instance, well, let me finish that statement before I transition to the next one. You would have never had that thought because most of us don't even believe in living long enough to see the
Yeah.
fruits of our investments, you know? So I wanted to add from what I was saying by uh emphasizing something I think is important, bro. When we grew up from where we grew up, we came here in the States, we came from Haiti, and it was kind of like a survival means of like escaping danger and turmoil and unrest and uncertainty back at our home country due to the political things that go on. But when we came here, we also saw that there was a survival mechanism that was happening in our hoods. And one thing about hood dudes and folks like who get it how they live and they hustle and whatnot, they hustle day to day. And I've been saying something in my head like, bro, if you know thugs and gangsters and hustlers and whatnot, if they were thinking long term and they had some investment portfolios, bro, they would think twice about hugging the block and just loving the streets, bro, because like,
Ethan.
yo,
Yeah.
don't you want to see your crypto portfolio boom, bro? Like,
Yeah,
don't
for
you want to
sure.
live to pull out some profits from like some stocks? No, but nah, like when you live in a day-to-day lifestyle, like you live by the gun, you die by the gun, and you live by your actions. You could go to jail tomorrow. Like you're not thinking long term on average. But there are
Yeah.
some smart investors, even if you're street smart, you're like, man, if I do this for the next 5 years, then I could go wash the money and invest into like, long term stocks or even, since I'm hugging the block so much and since I got, you know, this street tatted on my body, I might as well go a step further and invest in that block too. Like get some property. Half my people's is paying rent over here. why not be the landlord? You know,
Yeah.
stuff
Don't
like
let your
this.
ops know.
Yeah, nah, man, hey, we ain't got no ops, man. You feel me? But but yeah,
Yeah.
definitely don't let your ops know that you the landlord. You might want to
Yeah.
have somebody else partner up because that would probably piss me off.
Yeah.
Not only is he my op, but he my landlord. Nah, I'm moving out. Nah.
Nah, for sure though. You do have a point with that, bro. Like, I guess a lot of the I mean, I would say it's like the music, bro, but it is good music, but it's like a lot of our youth, they don't really see themselves, being 30 or in their 30s or
Right. They don't see
40s,
people
right?
making it past 30 where they from.
Yeah, so they want it fast. They don't really invest. If they invest, they want quick returns. They want instant gratification. Like, they want the designer stuff. They want to show off and things like that because they want it right now. Because to them, like you said, they could die tomorrow or they could die today. You know what I mean?
You
So
only live
I,
once.
yeah, the YOLO mindset. I feel like the
Right.
YOLO mindset is just like when people say that when they about to make bad decision or they want to justify their decisions. As far as like, right,
True.
YOLO, you only live once.
Yeah, yeah,
Okay.
yeah. That's true. YOLO and
Uh,
hold my beer. Two words,
yeah.
two statements made, and you know something bad is gonna happen.
Yeah, I feel like maybe like our community needs more people like I guess like you and me, right? As far as giving back and mentoring the youth, so they be like, hey man, you can live to be an old man, bro. Like that's okay. That's actually kind
Yeah,
of cool. I mean, and you should learn investing, right? So you could build wealth at a young age. And by the time you 30 or 40, you're gonna have like a nice nest egg. And if you do go to work, right? You go to work because you want to, not because you have to. So there's a big difference when you have to go to work and when you know what you want to go to work. So
yeah.
that's a big thing right there.
That's powerful. And and I see that there's a lot of growth in our community as well, ever since the past couple of years. Um, in our generation, I will say, because we're just like furthering the flagship pole. And even with our rappers, fam, like you're listening to podcasts and interviews now, and you're hearing Young Jeezy owning half of Atlanta, or
Yeah.
Ti, buying properties, and even Thug, like you hear, like even though he's in jail, or whatever, like you hear, bro, like this man is an investment guru. Like he got a lot of properties and real estate, and we started to understand, like even Lil Durk, bro. I heard like he got a whole line of like truck fleets and things of that nature. Like we want to hear these things, bro. And especially, I mean, we saw old boy Meek Mill was trying to tell everybody to get into crypto, bro. That was nice, even though like
Mhm.
they got in at the highs, and then what happened after that.
Yeah.
But it's a
But
different song being sung, and I think it's very important for us to see that as a black community.
yeah, I feel like because nowadays like information is so much more available. It's at the tip of our fingers now, right? If you think about back then, bro, like I'll transition this back to stocks and investing. Back then, when I first got out of high school, I was trying to buy. Damn, I might just give my age here by saying that, but I was buying Facebook stock, right? I was like, okay, let me buy like 2 shares of Facebook or whatever, and it cost me 10.99 per trade, bro, to buy
What?
Facebook.
Hold
Yeah,
up, you
because
talking
back
about ten
back back
dollars and 99
yeah,
cents?
back then it cost you to
Oh, we need
trade.
to go back in
Yeah,
time.
yeah, it cost you to place a trade, bro. So if you wanted to go in and out of a stock one day, you paying $20, $10 to buy, 9.99 or 10.99 to buy, 10.99. And I was on E-Trade. I remember it, bro. I bought Facebook and went down. I was like, nah, I'm selling. So I lost $20 just from going in and selling the stock because I didn't know what I was doing. I was just playing around or whatever. But if you think about it now, you trade for zero, like there's no cost to trade at all. Right?
Yeah, it's
You
true.
go in and out of a stock and not paying. I remember even in 2020, was it 2020? It was 7.99 to make a trade with Thinkorswim. So now you don't have to actually pay these trading fees anymore. You could just go in, sell, buy and sell at no cost now, right? And
Yeah,
then
that's true.
also also with social media, a lot of information is circling around, especially around the Black community. We're like, oh, we can buy stocks now, right? Our
Right.
parents couldn't really, not our parents because we're not from here, but I guess you could say people who are from America, like in the 90s, their
Mm-hmm.
parents, they probably know about stocks, but didn't know how to buy it. Like
That's
there
true.
wasn't no computers they could go in to go buy, let's say Amazon stocks or whatever, for them to
Yeah.
participate in what was going on. They didn't have
Right.
that. It was only
That's
the
true.
rich folks, the people on Wall Street. Like we didn't
Yeah,
have
we
like we
thought that was a
buy
rich folk thing to do. But then Wall Street looks
exactly,
like us now, kind of like Wall Street
exactly,
Trapper
bro.
usually says. Yo, I love that line too.
Yeah, so
It's
like I said, like
impressive.
this right now is like this day and age is like the best opportunity for anyone to build wealth, bro. With real estate, with stocks, because the information is out there now. Back then, it was really hard for people like let's say in their 50s to get their hand on the information if they wasn't like you know like high class, I guess, high income earners where like financial advisors would come to them. Like the
Yeah.
hood didn't have that. Like the
No.
the the black community didn't have that. They
Yeah.
just left it, they gentrification us, whatever the case may be. Like, you know what I mean? Like we stuck paying rent forever. We don't own a property. We didn't know how to own a property. We didn't, you know what I mean? So now it's different and we have to capitalize on that. So the next generation is better off than we are right now.
That's a fact, bro. And as you are talking, man, I went and quickly looked at Facebook, as you were saying, which is Meta now. And man, in March 2020, it was at $135 and it ran until 347. In 2022, it pulled back at 83. I guess there was a split. And so from January 2023, bro, it hasn't stopped pushing. We had a slight pullback in October of 2023. And then man, like January, we're sitting at 526 now. And
Yeah.
it's so hard sometimes to be looking at price where it's at and then still say, man, will this continue pushing up and be worth more than this? Because for you, you feel like, man, the ceiling is where it's at right now, but the ceiling ain't no telling what the ceiling is, and it could really be 50 worth $3,000 like Amazon in the next
Yeah.
10 years, bro. So the secret really is just cost averaging what you can and just making a habit of like putting your bread in there. And if you so happen to make money in different vehicles like the bonds or Forex or options, it's just like literally like rinse and repeat. And even real estate, you just keep on playing that game, but it's so hard to even start. So like what would you say to somebody who's like trying to start and feel scared, to invest their coins?
I would say it's the first step is you got to start, right? You got to start
Yeah.
investing. So pick your favorite stock, right? Look around your house. What do you use? You on Facebook every day. You consuming on their platform all day. Just buy their stock and see how it is. Not financial advice. Or like I said, you could buy the S&P 500. But if you want to get stock exposure and start getting a feel for it, I would say look around, look what you use on a day-to-day basis, and buy that company after you do your research to see if it's a good company to buy. So therefore, you're like, okay, I use Facebook. I'm gonna buy Facebook stock. I buy on Amazon all like 5 times a week. Especially like those who has like girlfriends and wives, they
Shout
buy a
out
lot of
to
stuff on
Amazon Prime
Amazon,
and shout out to the
bro. They
wifeys.
right? So your wife or girlfriend spends money on Amazon all day long, buy the stock, right? So I would say to start there just to get comfortable with it before going into other things. So that's what I would say for someone who's like a beginner and wants to start and never bought a stock before. That's where I would tell them to go, and then from there you could do your research, follow some people on Instagram, or YouTube is a great place to, do a lot of research to become better. Because once you start and you get the thrill, right? It's beautiful. Like it's like now it's in your vein, it's in your blood. You're gonna want to keep investing because you know what? That's what the rich do. So
That's what
you
the
should be
rich
doing
do.
it too.
I love that,
Yeah.
bro. Well done, well said. Um, wow, that's I couldn't have said that any better, bro. Great advice, great advice. Not financial advice, but still a good advice.
Yeah, no, for sure. And another thing I like to add is like every dollar that you have, you can have like if you make it like you're not really like I'll say wealthy or rich in a sense if your money is not working for you. So each dollar is an employee of yours. Put it to work, right? And then it'll multiply. It'll multiply because God put us on this planet to multiply, right? To have kids, I guess. But so make your money multiply. It's the only
Just like you
way.
do your kids. I like that. I like
Exactly.
that, bro, because your kids gonna need to ask you to multiply your funds just to keep taking care of the family.
Exactly. Of
Yeah. I guess family does matter at the end of the day, and it's the centerpiece of
course.
everything that gives us purpose. And so,
Mhm.
I heard somebody say, like, yo, make the market your savings account.
Okay.
Yeah. So, obviously that's a hard bar, but I think make the S&P 500 your savings account
Yeah.
if you were to be
Yeah.
saying that as a
I would
Simplice
go that route.
financial suggestion,
But
because
but
hey,
I would say just to add to that a little bit, I would still have like like maybe 6 months of expense put to the side, like in a high yield savings account, because
yes.
markets does go up and down. And let's say like it's a bad year, you don't want to be pulling money out while it's a bad year, right? You usually you shouldn't be touching that money, but if it's long term. So you can make it your savings account, but I'll still put some money to the side. Like I wouldn't be all my money where I need to go sell some stocks or sell some S&P 500.
Yeah, I've been there
Uh,
before. I've pulled out a lot from like my Robin Hood when things were getting tough. Wow,
yeah.
I didn't even think about that until now, bro. That's a good
Yeah,
advice right
so
there.
you might be selling at the lows and then they recover again, right? And then your money's not in there for you to recoup your initial investment or whatever. But I would say to like, still put some money to the side where you don't need to like go into your investment accounts, right? And you just let them grow. And then another thing I wanted to emphasize about is as far as like investing, right? So what people should do, like do it automatically, right? So dollar cost averaging, right? But in Robinhood, you can set that up as like an automatic investment, right? Every week, it takes $100 out of your account because if you get paid every week or every 2 weeks, it'll take 200. It'll invest it for you. Then it's on autopilot. At the end of the year, just like, oh, okay, look, da da da, I'm up this much, and you take away the physical traction of you actually doing it, and it's doing it passively for you. So that's another thing. If you're a beginner, I would definitely consider doing.
Wow, that's a really good jaunt too, because if I'm thinking about it in the sense where someone would love to own an Amazon stock, right? And it
Mhm.
costs 3,500, for instance. But within your first year of investing, bro, 30 weeks into putting that $100 into like Amazon, you would achieve that goal. In the next year, you'd probably have two stocks worth of
Mhm.
Amazon just by putting $100 every week, or yeah, wow, that's amazing, man. When you think about
Yeah.
the ways you can uh achieve a goal, and some people like they deal with anxiety of starting, and
Yeah.
really if they thought about starting it, not just when you're starting from scratch, you're not really starting from scratch if you start incrementally, you know
Mhm.
and
Mhm.
that, I think that's one of the biggest things I learned from the past is like I I was so scared to like put money into the stock market because I didn't know better. But also when things got tough, I did pull out from, the positions, and then now it's booming. And one thing I remembered is like, man, had I just consistently put just a little bit and a little bit, it would have been a better strategy to, cost average instead of literally watching this thing run and you're not in it, you know?
Yeah. Yeah.
So
So the best thing to do is dollar cost average because the market has ups and downs. And doing the downs, you're actually buying at doing the downs. If it's doing automatically for your dollar cost averaging, and then when it goes back up like the roller coaster ride, like it normally does, then you're happy that you was buying doing the downs because now everything is back up. Now your portfolio is higher, everything is higher. So
mm,
it's one of the best ways to invest.
okay, that makes sense, bro. So, I mean, before we finish, I mean, we really could talk here all day, but
No, for sure.
obviously everything that has a good start must come to an end, and we can continue and drop a couple more episodes from time to time.
Yeah,
Um,
definitely, man. I'm definitely welcome to come back and drop some gym on here, bro.
for sure, for sure. So like let's say you were to want to become a millionaire and you're looking at a stock that has potential, like for instance, Palantir, how would you go about creating a plan to know how many shares you would have versus what the anticipation outlook is in the next 5 to 10 years to see like one day the numbers of shares you bought versus the gains that it ended up having would be sitting here you looking at your account and it says like $1 million. Like how would you go about something like that?
That's actually a lot harder to do, but you can calculate it, right? You have to see, hey, how much you're gonna put in the company. I wouldn't necessarily do it by the number of shares. I'd be like, okay, if I have $10,000, let's say Palantir shares at $25 a share. I don't know how much that would be. Maybe it's like what,
Oh
500
yeah,
stocks or
that was a
something?
little spot on, bro. You must be looking at Palantir.
Oh, no, I kind of know stock
Yeah, it's
prices,
definitely
bro.
sitting at 25.33,
Is
my
it 25?
yeah, 25.33.
Yeah, so you'd be like, okay, if I put 10,000 into this company, I'm gonna have a certain amount of shares, right?
Yeah,
So this company has to return, I don't know, 1,000%. I don't know if it's exactly 1,000%. I'm just making numbers up
right.
for that thousand to become $1 million. If you really look back at it, if you did put 10,000 in Nvidia in 2010, I think it would have got you $1 million today. so
Ooh. So let's talk
so it
about that then. Palantir, for example, is like at $25. If you were to put 10 bands into this at $25, you would have had 400 shares. So
mhm.
now I guess the calculation will be 10,000 divided by the cost of the stock, and it would give you how many shares
let
you
me
would
let me
have.
put it that way. If it's 10,000, then if you get 1,000% on 10,000, I believe that's 100,000. But then if you get 10,000% return on $10,000, then that would be $1 million. So
Yeah,
for
that's
so
true.
that yeah, so Palantir would have to return 10,000%. So Palantir would have to go on a Nvidia run, honestly.
Yo, Palantir would have to be worth $2,500 for your 400 shares to be worth $1 million. And how I did that math is I did 10,000 divided by the $25 that it cost. It gave me 400 shares, and I'm like, wow. So I guess in order for me to have it, if I were to see $1 million off of this, then a million divided by the 400 shares, it gave me 2,500. So I was like, ah, dang, we would have to be waiting for a long time, or we'd have to get more
Yeah,
shares.
but here's the thing. Here's the thing, right? You can make $1 million if a company is going up, right?
Yeah,
Faster. If you see that initial investment of 10,000, let's say
yeah,
okay, I put $10,000 in there and I put $500 into the same company every month
right,
or a thousand
right.
dollars into this company every month. You may not have to wait for 10,000% return, bro. You may have to just wait maybe for 1,000% return and you'll get
Right.
to that million.
Yeah.
Because every dollar, every new stock you buy, those stocks are going up in value and going up in value. So that's another way. If you really believe in a company, you could put your initial investment and dollar cost average all the way up to, I guess, your goal.
Yeah. Or you could buy 2,500 shares while it's hot right now. And next thing you know, if you got
And
a
hopes.
milli, hey, you know what I'm saying?
Right?
But it's just some fun math, just to really sit here and anticipate or think about like
Fun
what's possible in
Fun
the new.
fun fact, a lot of Nvidia employees or millionaires, and I heard they're having like some type of issues right now where people are not working hard enough because
Yeah, it's
everyone's a
like, hey,
millionaire in the
watch your mouth.
office.
It's like, yo, you guys need to clock out. Hey, watch your mouth, bro.
For real, like, bro, there
You
are
coming to
literally
work
people,
early?
bro.
Hey, careful who you talking to.
They're like, hey, I'm worth 10 million, you only worth five.
You feel me?
Like,
I
yo,
just might quit today. Stop playing with me.
no, for real.
That's insane, man. Shout out to
Yeah,
these tech stocks, man, and
yeah.
definitely want to do our research. And so, like, when it comes to doing research, where do you go on a stock just to like really do the right research?
Okay, you can really do research on many different platforms. You could use Google, but I personally use Yahoo Finance. Yahoo Finance has everything that you need. It has the balance sheets, it has the income statements and stuff like that. It also has the like the PE ratio, price to earnings, right?
Earnings ratio.
Because yeah, so pretty much what that means is if a company has a certain amount of earnings, right? I'm just gonna put a number out there, like $1 billion of earnings for the year, and they're trading at their market cap is 20 billion. That means they have a 20 PE ratio. So they trading at 20 times their earnings. So that's what that means. So
Wow.
you
Okay.
yeah, so just to give you an example, the S&P 500 itself has a earnings a PE ratio of 16 or 17. So any stocks that you buy that's below that is kind of like, I guess they call it cheap because it's below the market average of PE, and then anything above that would be expensive. So Tesla has like a 67 PE ratio. So you buying Tesla, it's considered expensive, but it's a super high growth stock. It can grow into that PE ratio. So that's why a lot of people kind of like, oh no, oh it has a PE ratio of this much, but it'll grow into it because they have a lot of growth. But I use Yahoo Finance a lot. I also do research on YouTube, and there's something called FinViz where if you're trying
Enviz.
to look for, yeah, if you're trying to look for a certain amount of stocks based on like market caps and stuff like that, you can use FinViz. They have the free version, which is really helpful. So, but Yahoo Finance, you can find everything there if you really wanted to.
Okay. That's a good gem, man. Wow, you
Mhm.
really gonna have to start telling people where you find all these gems from, bro.
Nah, bro, I just kind of like I enjoy the space, and like I enjoy doing the research. I enjoy watching CNBC. I enjoy learning about the economy, what the Federal Reserve is doing. I enjoy looking into stocks. It's like it's fun to me, man. It's not really work. I don't think like it's not like a chore or something. Oh man, I have to look into this. Like that's what's fun to me. Everybody lay down and watch Netflix. I'm watching YouTube videos on stocks and investments, and I'm doing research. That's fun to me. So it's I guess I don't know. It's just that that's how I guess I know all these stuff. But
It's the
yeah,
passion. It's the passion behind the work. And I'm guilty of that. You can catch me on the charts learning about, my strategies, learning about different things from the markets that's just making me better because, when it comes to investments and, trading, for example, bro, like you give yourself a raise. You're not waiting for somebody to give you the okay.
exactly.
So knowledge is the capital gains raise that you earn. And so why not stop when the sky's the limit? There's no cap on how much you can make. It's all about how much you learn and how much you earn. So, I give you some props for that, Brody. And I can also relate to you when you said, it's about like understanding and doing research behind it because you have to really put in some time to know why this did what it did. And if you're gonna be investing in something, why not do so much to learn about it? You don't want to
Yeah,
be a blind investor, and you kind of feel like you have the seat at the table of like the board members and the people who
yeah.
are the CEOs and the movers of this market. So yeah, thank
You
you for breaking down price to earnings, man.
No, for sure. And you'd be surprised how many people would just put $10,000. I'm just giving you an example in a stock that their friend told them to buy and they did no research, bro. It's like, why would you do that? Like, would you give a stranger $10,000? No, but that's why you have to do your research. I was talking to my cousin earlier. He was showing me that he bought this stock, and I'm like, "Where'd you get it from?" He's like, "I don't know. I just saw it and I put 5,000 into it." I'm like, what? Like, bro,
Dang,
like, what if it goes down tomorrow? He's like, I don't know. I bought it and it went up, and I was waiting for it to go up again. Like, I'm like, dude, you need to sell this tomorrow. But besides that, Warren Buffett has a quote where he says, because he's a super long term investor, he said, pick a company where if the stock market closes tomorrow and it doesn't open for 10 years, you'll be happy with the results. I'm like, damn, that's kind of deep.
that's a
That's
bar.
kind of deep. It's kind of deep.
Sheesh. Shout out to Warren Buffett.
For real.
That boy
So it's
old, but
like,
that boy got wisdom.
no, he got a lot of wisdom, bro. He makes a lot of sense. And what company right now that I have in my mind that I'd be comfortable with holding for 10 years? I'd probably say Amazon, Apple, um, maybe Nvidia. I don't know, but it's like, these type of companies, so like they're proven. you know, and they have a business model that works, and
Yeah.
they identify when they have competition and they buy them out. They buy out their competitors, right? So
Damn, that is true.
yeah,
That is true. And when you look at it in this crazy dystopian future that we're slowly walking ourselves into, we have AI that's pretty much helping for the improvement of like overall performance. And so this is why when we think about whether this was a recession or if we're in a recession, even if it was, this is not our grandparents' recession
yeah,
because humans are getting fired, but artificial intelligence is getting hired. And
yeah,
it's
scary.
crazy because like without the emotions, we got like sentient machine learning beings that are like outperforming human performance. They don't need to sleep. They ain't got periods. They don't got pregnancy. They ain't got
No bathroom
accidents.
breaks.
Yeah, no bathroom breaks. You know what I'm saying? Like none of that. No lunch breaks. And yo, it's getting scary. But when you
Yeah,
think about some of those companies and how our system works, then it makes every sense to be investing in companies that you can't seem to not think the future is going to be written without it. And so earlier I was saying how America runs on credit. The reason why most people can't even afford to stay off of work even during holidays is because you got to really get back into uh, clocking in those hours, taking care of those bills. And many of those bills are on autopilot on credit cards. And some of those
yeah,
credit cards, that's why Visa, MasterCard is still at the top
yeah,
50 or top 10 into like the Dow Jones and the S&P 500 because like that's
yeah,
what's also being that's what we're doing to swipe the cars at the groceries and swiping the cars to invest, and those companies are the common denominator to help fuel everything that's going on all around the world. So it's just like when you think about it, it's really a basket for real.
yeah, yeah. And then, you know, like these companies, they getting people to pay them 29% interest on these cards too. So they making a killing.
They making a killing, you know. But overall, bro, is there anything you'd like to say before we close out for this episode?
Nah, all I gotta say is thank you guys for tuning in. It was a pleasure. You can follow my page at Simplice Finance underscore on Instagram. I'm also on TikTok, Simplice Finance. There's no underscore there. Thank you for having me, bro. And I look forward to coming back to just, you know, just have a simple conversation and just share some more knowledge that I think will be helpful to your audience.
Absolutely. And you can find me as SirHansfelix. Once again, thank you for watching. Find me on Instagram at SirHansfelix. I am on TikTok, but not as much as he is. Uh, but definitely keep on the lookout for the next episodes. Thank you for watching and tuning in. See you next time.